Hi friends, your Rosario from Simply Options. Today's session is going to be the first episode in Demystifying Options. This series is, as you are aware, this series we are going to learn options stage by stage. Today we will learn from the basic what is options. Let's understand that first. What is options? Options are a sort of derivative contract. It's one of the derivative contract. Now there comes a question, what is derivatives? The textbook definition of derivatives is, derivative is a financial instrument whose payoff structure is derived from the value of the underlying asset. This is what the definition goes. For someone who is listening to this definition for the first time, it may seem Greek and Latin. Let us understand this with a practical example, and then we will revisit this definition again, then it will make a lot more sense. As this is a cricketing nation, we will understand options through cricket as an example. Alright, let's get started. Let's assume there's going to be a match between CSK and KKR this Christmas 25th December 2021. Okay. So, by what means you can watch the match? You can watch it either in TV or you can watch in stadium, say M.A. Chidambaram Stadium in Chennai. To watch in stadium, what is the prerequisite? You need a ticket. There are two popular ways of getting this ticket. One, you can book it online, you can go and stand in the queue and get it in the counter. The other popular way is through recommendations. Like if you are in corporate, you will get the corporate tickets, or if you know some influential person, you can go and approach them and they will arrange tickets for you. Say for instance, I know one influential friend who is going to give me the recommendation. He comes into TV often and shouts, Mitro, Mitro, he shouts. I would have guessed it right. My influential friend is Modi ji. I am going and approaching Mr. Modi and asking him, I want to watch this match. I need 10 tickets. I don't want to watch this free of cost. Let me watch this match. Per ticket, I am ready to pay 100 rupees. I need 10 tickets. Per ticket, I am ready to pay 100 rupees. Then he takes his pen. He writes a recommendation letter to M.A. Chidambaram Stadium staff. Mr. Rosario will come and present this letter. Give him 10 tickets. Per ticket, the rate is 100 rupees. That way he is giving a letter. Now listen carefully the sequence of events. Now what do you have? You have a letter stating that you are eligible to buy 10 tickets at the rate of 100 rupees per ticket. Now event number 1. Since this is going to be a match, exhibition match, generally the demand for this match will be quite high. The current market price per ticket is 200 rupees. Now as a stock market aspirant, you have two options at your end. One, you can buy this ticket and present this letter, buy this ticket and go and watch the match on 25th. The second alternative is whether you can make an arbitrage profit out of it. The answer is yes. You have the right to buy this ticket at 100 rupees because of the recommendation letter. So what you can do, you can buy this ticket and 10 tickets. Per ticket, you can make a profit of 100 rupees because the current market price is 200 rupees. You have the right to buy this ticket. Using this letter is 100 rupees. Per ticket you will make 100 rupees. For 10 tickets you will make 1000 rupees. So this is what you can make the profit out of this letter. Now if you ask, someone is asking you what is the value of this letter, also on this date the value of this letter is 1000 rupees. I hope this point is clarified. Now event number 2. You are getting some news that Mr. Shah Rukh Khan, who is the owner of KKR, is under rigorous training. He is under rigorous cricketing training. He is planning to open the bat for KKR. Since this is going to be an exhibition match, he plans to just to do a show. He's a showman, right? He wants to do a show with cricketing skills. So now, what would be the demand for this ticket? Obviously, he is a big star, Bollywood star, and he is going to appear in a cricketing ground. Then the demand for this ticket is shooting up. Now, the current demanded market price for this ticket is 500 rupees. Now what would be the value of this letter? Given the circumstance, this current market price of this letter is 500 rupees. So per ticket, you have the right, because of Modi's letter, the counter person cannot give you at a higher price. He has to give you 100 rupees only. So he is giving you at 100 rupees. The current market is 500 rupees. You can buy and sell it at outside for 500 rupees. So the profit which you will be making is 500 minus 100. 400 rupees is the profit you are going to make per ticket. For 10 tickets, you will be making 4000 rupees. So now if you observe keenly, when the event number 1, your value of this letter is 1000 rupees. Now in this event number 2, this value of the letter changes to 4000 rupees. Now let us go into event number 3. Event number 3 is going to be a tricky event. In event number 3, there is a recent development. The Tamil Nadu Meteorological Department announces there is a high probability of rain on Christmas Eve. The cyclone has been formed near Bay of Bengal. So the probability of rain happening in Chennai is very high. 98% probability there is going to be a rain and the match is going to be a washout. So then what would happen to the demand for this ticket? Obviously, right, the probability of happening of the match itself is deteriorated. The price will also drop. Now the price drops to 50 rupees per ticket because so much of flood rain is happening currently and the probability of reaching to the match and the match is happening itself is in question. So the price astronomically drops from 500 rupees to 50 rupees as per the recent development. Now what would be the value of this ticket? I will take a pause here. You just think whether it is minus 50 rupees or 0. If you see mathematically, it should be minus 50. Your 100 rupees you are buying, you can just sell it for 50 rupees. But if you think carefully, the answer is just 0. The reason is you just have this letter. If you want, you can use this letter, present to that guy in Check Park Stadium and buy that particular tickets at that particular rate. When the market price itself is trading at 50 rupees, you won't be an idiot to go and present this letter and adamantly say, no, I want to pay 100 rupees. What you will do, you will neatly tear this letter and throw it in dustbin. And if you still wish that the probability of match is going to happen, you will go and buy in counter for 50 rupees. So that way, when the price drops, then the whatever price written in this particular ticket, what you will do, you won't use this letter as good as this. So if you observe the key of events, in all those events, you have the right to use this letter. When this letter is not favorable to you, you don't have any obligation to use this letter. I hope this is the point I want to try to derive all these events. So in this third event, the value of letter from first event, the value of the letter was 1000. Second event, the value of letter was 4000. In the third event, it is dropping to 0 rupees. This is what event number 3 does. Now event number 4. On 25th December, the match doesn't happen. Then after 25th, on 26th, what is the value of this letter? The value of letter is still 0 because the match itself has gone. There is a validity for this particular letter. You can use this letter only until the date of the match. Post the date of this match, there is an expiry period for this letter. The letter expires. So I hope I was able to drive the point of how the value is changing from one as per the market development, from one event to other event, the value of the letter changes upside and downside. Now if you observe keenly, there is two instruments. One is this letter, the other one is the ticket, IPL ticket. This letter's value was fluctuating from 1000 to 4000 and to 0. Based on what? Based on the price movement of this ticket. Whenever there is a demand for this ticket, the ticket prices were increasing. So does the value of this letter. Now let us revisit the definition which I was earlier saying about derivatives. What is derivatives? Derivatives is a financial instrument. That is this letter. Whose payoff structure? What it is, the plus, minus, plus 1000, 4000, all these are the payoff structure. Whose payoff structure is derived from the value of the underlying asset. In this example, the underlying asset is the ticket. Whenever the ticket prices increases and decreases, the value of the letter is increasing and decreasing. This need not be a letter and this need not be a ticket. We can substitute this in n number of ways. In stock market, what we have this as an underlying asset is generally stocks. For example, HDFC share, you can be an underlying asset, and this instrument you need not go and ask Modi ji. You can very well, instead of getting it free, you will have to pay some nominal premium, and you can get this particular letter in a form of call option. This is what is called as a call option. In next episode we will understand in detail what is call option, but the point here is this instrument is deriving its value from its underlying asset, whose payoff structures accordingly aligned due to the market dynamics. Likewise, in HDFC Bank also, you will get some positive news, you will get a negative news. The HDFC Bank share price may go up, may go down. According to the movement of this HDFC Bank share price, this call options value will also increase and decrease. And like this letter had an expiry date of the match date, this particular every option contract will also have an expiry date, post which you will not be able to use this contract. Thank you. We will now continue in episode 2. We have given the preamble of what is derivative, how an option is working. All along we were seeing the example of a call option. We will understand in next episode in detail what is call option, what is strike price, what is premium, what is expiry date. All those terminology we will get accustomed in our next episode.